Yes. Sejal Madam, please start.
Yeah, a very good afternoon to one and all the participants here also. I would initially like to welcome our President, Pad Badeka, Vice President, Vinod Maskeji, and Honorable Joint Secretary, Sunil Joshi ji, Treasurer, CA Jatin Cheda, and Vinod Maskeji, and Chairman Pranav Kapadia ji, and our today's speaker, our senior member, CA Janak Vaghani, and all our members here. So this is a study circle online that we have today. And first of all, on this occasion, I would like to wish you all a very happy Teachers' Day. Thank you. A happy Teachers' Day to all the tax practitioners for your guidance, dedication, and invaluable role in shaping success within this complex field of taxation. Thank you so much. Now I would hand over. First of all, I'll like to make some announcements. I would like to share my screen and then the brochure. We have a few of the events that are coming up. So I want everyone to register for that. And this is going to be like really good and very informative sessions. I will just share my screen. Yeah, so the first announcement is regarding this 50th residential refresher course, which is there from 29th January to 1st of February. And we have an early bird offer there. Fees needs to be paid by 15th of October to avail the early bird discount. The second thing is we are introducing this GST beginners course in Marathi. And for that, it's a very nominal fees and it's a exclusive course in Marathi with eminent speakers. So we request those who want to join the Marathi coaching classes, please do register for it. The flyers have been sent on various member groups and channels as well. The third announcement is for the GST. This is done. Yeah. The GST beginners course, which we are also having it in Gujarati for the benefit of all those who want to attend it in Gujarati also. So along with that, we are also giving a complimentary beginners book on GST for every participant. So the details are all followed in the flyer. So please register for all these events. Now I will hand it over to our president, Path Bateka. So,
Thank you.
I'll just stop sharing.
Thank you. Yeah. So I welcome each one of you. I welcome the speaker, the chairman of the committee, the conveners, and the office bearers. Most importantly, all the participants. I'm very happy to know that close to 120 people had already registered about an hour before we started this. So now there are, I mean, the moment Vaghani sir's lecture gets over, everyone leaves the leaves the meeting. So I wanted the announcements to be done. So I request everyone to enroll and take advantage of each and every program that is being done. Be it the Marathi coaching class, the beginners course, the Gujarati beginners course, many more to come. There is intensive program which is already on. Most importantly, our Foundation Day, the more details will follow with regards to that. The thing is that
Parth, sorry, we are not able to hear you. I think others are also able to hear it.
Yeah, we
There's
have
a little error. Yeah. You'll have to repeat the whole thing, please, if you can.
No, we couldn't hear. Please repeat.
Yeah, so meanwhile, till the president could connect, can we have our speech from our chairman, CA Pranav? President, you are not audible. President, you are not audible.
No, Pranav, you go ahead, I think. Pranav?
Parth still not audible.
Parth, can you connect from office laptop, please? And meanwhile, we can have the request to chairman.
Yeah,
Sajal.
request the chairman. Yeah, Pranav, please go ahead.
Yes,
Pranav,
so,
there is some.
Pranav, go ahead. Pranav, go ahead.
I'll continue from what Parth was mentioning. So a very good afternoon to all of you and welcome to this second study circle meeting for the year 25-26. First of all, I'd like to welcome our speaker for the day, Janak Vaghani, who has been instrumental, and he was, very much keen in identifying that there are going to be so many complications apart from the press release that we are going to get. Of course, the notifications are going to bring in more complications later on. But this is what we were discussing when, before few days when this meeting was scheduled to happen, this council meeting was, getting scheduled, and we were discussing and hence we thought fit that yes, we should have Janak Bhai to give his views, the first views, prima facie views on this amendments which are going to come, and we planned it well in advance. So thank you very much, Janak Bhai, for accepting our invitation to address all the study circle members, and yes, it is Teachers' Day today, so we have a good teacher, a very well experienced person, a teacher who is there to share his knowledge with all of us, and I'm sure this is going to be very very useful to all of us in making us understand as well as our clients understand the nitty-gritties of the amendments which are made. I think as far as the activities of GSTPAM, which Parth was mentioning, yes, Sejal Madam has already announced about the RRC, the Marathi coaching class, and the Gujarati coaching class, which are already scheduled. The details are there in the flyers which are being sent in the members group. So in case any members has not got it or wants to enroll, they can kindly do it. And I think there is some more announcements by the president himself. Maybe he will take it up later. And just to add about this GST Council meeting, I think it's been 8 years since GST has rolled out. The baby is 8 years old now, and there are certain changes happening in the life of GST, like they happen in the life of a person after the age of 8 years, 9 years. So I think, and those changes are evident. They were required, and of course, with the geopolitical situations around the world, India had to show its strength to the world also, that okay, our economy is so strong that we can partly manage it ourselves also if there are geopolitical conflicts. So I think a very bold step, GST 2.0, very historical meeting which took place, and historical announcements which have taken place in the arena of GST. And to guide us for this, we have Janak Bhai Vaghani. And I'll now request Advocate Sejal Shah to introduce our speaker for the day, CA Janak Vaghani.
Yes, before I introduce President, any word from you? Okay.
No, I don't want to waste time. There was some problem with the internet. I apologize for that. So all the announcements are done. I request wholehearted participation, especially the RRC, the Foundation Day, and everything. And I would not want to waste the time. We want to listen to Janak sir.
Sure. So it's an immense pleasure to welcome today's speaker, CA Janak Vaghani sir. He has formed a LLP under the name of Messrs. BJU and Associates, and he's a reputed chartered accountant practicing in the area of direct tax, including international taxation also. He's presented papers at NRRC, RRC, organized by various professional organizations on the subject of sales tax. He's written books jointly with others on sales tax, works contract published by various professional associations. He was a member of a study group of WIRC of ICI for publication of Guide to MVAT Audit and issues on VAT audit published by WIRC. Also publications on amnesty scheme for WIRC with other members. He has contributed articles, columns on sales tax in various tax journals. He's regularly giving lectures on sales tax, VAT, and GST in various public meetings, seminars, conferences, study circle meetings, guidance cell. He was the chairman of the Malad Chamber of Tax Consultants, national vice president of AIFTP, and he's regularly making representations on the issues of GST and VAT before the government authorities, personally as well as through GSTPAM. At present, he is the honorable consultant of various trade associations, chairman of Joint Workshop Committee of GSTPM, member of National Executive Committee of Confederation of GST Practitioners and Industry, and our own managing committee member of GSTPM and managing committee of Malad Chamber of Tax Consultants. So with this, I welcome CA Janak Vaghani. So please welcome him with a loud round of applause.
Thank you. Thank you.
Over to you, Janak bhai. Yeah.
Yes, namaskar. Jai Shri Krishna.
Jai Shri Krishna.
Jai Jinendra.
Jai Jinendra.
Jai Mataji and Jai GST.
Jai Mataji. Jai GST.
And at the outset, I thank the team of GSTPM and our LLR committee chairman and the team Pranav and Umang, Sejal, Ajay, etc. for giving me an opportunity to compulsorily study the amendment in detail at the earliest point of time and analyze it and present before you so that the simpleness of in GST is kept intact. Because our Honorable Prime Minister has stated and when the GST was announced in the Parliament at the midnight of 12 o'clock, still I remember his words that GST is not a Gabbar Singh tax, but is a good and simple tax. And since then, we were finding the goodness, simplicity in the GST. And that search of entire nation, including the government, was there since its inception. People are saying that there were a lot many changes in the GST. But please note that most of the amendment in the GST Act was made at the instance of the trade and industry and association like us to further simplify the GST. Today is a Teachers' Day, and with the blessing of our teachers, stalwarts like N.C. Mehta, B.C. Joshi, P.V. Sute, and all others, who taught us how to study the law. And I remember the words of Mr. N.C. Mehta, that law is simple. If you're ready to accept the findings, you make it. As a taxpayer, if you accept that yes, tax is payable, then it's simple. As a tax collector, you accept that tax is not collectible, then also it is simple. So simplicity is not in the law, but it is in our mind and perception. And we must compliment the government for their honest attempt to undertake the reforms, which is called as the next generation e-reform. And sincerely, they made an attempt to see that the most of the necessity day-to-day items remains either in the bracket of the nil tax or lowest rate of the 5%. And they have given the reasoning also why it is being taxed as 5%, so that the trade and industry get the benefit of the ITC of tax paid on their input and input services, so that the cost of that production cost of the goods sold is remained at its minimum level. Now it is a time for the industry to respond to the government in the same spirit in which the reforms are undertaken by the government by reducing their price of the goods to commensurate the reduction in rate of the tax. And today in the newspaper, I saw the effect of this amendment that most of the MNCs and FMCG producers and distributors have started offering the price reduction in such a way to catch the demand of the goods and services in this Diwali festival. I mean, I have shared the my presentation. Is it possible for someone to share on the screen? But I will not be able to do that.
Yes, Sejal
So
madam will do it.
So now,
The
with
Word
this,
document, right? The Word
yeah,
document.
Word document.
Yeah. Sejal madam. Yeah.
Now
Yeah,
with
just do
with
that.
this topic, this the objective of the government in mind, and the back of the mind, I will start my speech on the amendment. First is that they say, I mean, we remember the speech of our Honorable Prime Minister on the 15th August. First time in the history, I think that on the day of independence, a Prime Minister had made a reference to the tax reforms in the GST or in indirect tax. And I was wondering that what could be such type of the tax reform where the Prime Minister office has to involve themselves. We know that the GST is a state and central's partnership. So any tax amendment is to be brought by the consensus of the state and the central government. And why the Prime Minister office was involved in this, the reason was that, could be, I think, that because of the proposal for reduction in the tax, they wanted to remove the 12% tax bracket. And this 12% tax bracket is a 22% of share in the GST revenue. So while reducing the tax bracket of 12%, the government is going to have a loss of more than 40,000 crore rupees. It's a huge amount of the tax reduction. And the government contemplate that because of the reduction in the rate of the tax and also reduction in income tax rate, there would be increase in the buying power of the people of India, which will result into the more demand for the supply of the goods and the services and would increase the revenue of the government, a very positive approach by any government in an economy. Now, the first thing they have done, propose, I will discuss the rate later part, but our most problematic issue of the refund. We know that at the time of the GST, they said that refund would be automated and we will give the refund immediately. And for the tax payment on export of the goods, we find that it was working and it is working very smoothly. We don't have to approach to anyone for getting the refund. But when we make an application for the refund, either for the export of the goods or services, or without payment of the tax, and with payment for the services and inward duty structure, the departmental officers intervene in such a manner that they are very conservative in giving the refund. And at times, most of the refund applications either delayed or is being rejected and is being a subject of a litigations before the High Court and the appellate authority. Again, they are saying that the 90% of the refund to be sanctioned on the risk evaluation basis. This will apply for all the kind of the application, zero rated supply as well as inverted duty structure. into bracket we say IDS, not ISD, IDS. Now, when they have reduced the rate of the tax from 12 to 5%, we apprehend that large many cases would be covered for this inverted duty structure. Setal, can you just scroll next page? Now, when I say inverted duty structure, the first thing comes in our mind that what will happen to my stock of the goods as on the date of the amendment when my rate of tax is reduced from 12 to 5%. Now, when we look at the inverted duty structure provision, what it says that if your input is at the higher rate of the tax and the output is lower rate of the tax, then it is an inverted duty structure. So you are eligible for refund of unutilized ITC. And they made an amendment to that if you are dealing in the same class of the goods, so then input and output may be a different, but still you will not get that benefit of the inverted duty structure refund. That would happen in the case of a trading in the goods. Now, before 22nd September, the goods are taxable at 12%, and on 22nd September, it becomes a taxable at a 5%. So my input was 12%, my output is 5%. So I should be eligible for the refund of the unutilized ITC. Now, that is not possible because of the provision in the section 54 restricting and denying the refund in such cases. And in FAQ number 6 and 10, the government also made a reference to say that and said that you will not be eligible to claim refund of this unutilized ITC. That does not mean that you will not be able to utilize for your future tax payment. You will continue to get the benefit of the ITC as well as the utilization of it against your future tax liability. But what is required is that the government should change the formula for quantification of the ITC refund. Now it is a goods and service tax. So my input for manufacturing the taxable goods will also include tax paid by me on my input, that is the goods, and also input services, and also tax paid on by me on my capital goods used for taxable supply. The formula provided in Rule 89 does not consider the input tax credit paid, input tax paid on my input services. Now we know that GST is a value addition tax. So the price of the goods at which I sell the goods or services will also include the cost of the goods as well as the services. I fail to see any reason why the input services, tax paid on input services being denied in the formula. In section it is available, but in the formula they have denied it, and Supreme Court has also confirmed the formula denying the benefit of the refund of unutilized ITC in respect of the input services. When the government is so beautiful and bold and keen to reduce the prices of the goods sold, then we expect and hope that there would be another tax reform 3.0, whereby the government would undertake the amendment and the change in the formula to give the real unutilized ITC refund on the goods or services as well as the proportionate capital goods. That is my wish on this Teachers' Day and before we celebrate the Mataji Navratri. Next page. Now, they have increased the rate of the tax on the general residual category of the job work services from 12 to 18%. This has will aggravate the issue of inverted duty structure refund. So the government has to consider this aspect in the next council meeting. Then there was a refund of there was a restriction in the provision that if your refund amount is less or 1,000 or less than that, then we will not give the refund. Why? Why? There was no logic for that. It should be also the same way that if the demand is more than the 1,000 and less than it, then we will not make. But there is no such restriction for the creation of the demand. And we have seen that demand has been raised for 50 rupees, 100 rupees also. Now the government has realized this and they have proposed to remove this limit of the refund of 1,000 rupees. And that will help to the small exporters who are exporting the goods through courier or postal mode, where the value of the tax amount is 1,000 or less than that. Then they have undertaken and said that we will simplify the GST registration scheme for small and low risk businessmen with a liability of rupees 2.5 lakh per month. Automated registration in 3 days. Sejal, can you find it? I mean, I have not given the base number. And it's so small that I cannot read that. Okay. Now we know that the registration is such a sensible thing for all of us. That department is viewing the registration from the glass of NGTB, non-genuine taxpayers. Although we have instructions way back in 2017, still the department was asking more and more requirement over and above what was provided in the circular. Either in the name of the state specific requirement, or they say we have got instruction, nobody knows who gave the instruction. And you know what is the success rate of the application for registration? In more than 67% cases, the registration is being rejected at the first time instance. Then you have to make a multiple application for the registration. And this 3 days time limit would be after completing all the requirement. And the officer is satisfied, then only within 3 days registration would be granted. If you had an intention to simplify the things, then I would propose that the government should consider that the registration would be granted immediately on the submission of the application. Once you grant the permission under the LLB, under the company law, under the industrial licenses, under the FEMA giving a permission for the foreign remittance, in such cases there should be a single window for the registration, that wherever I first registered, there should be a tick mark and drop boxes that do you want a registration under which act, and once I ticked it, then the registration should be granted under all such enactment. And that would improve the ease of doing business amongst the world. Now, why do you want the requirement of a director, personal requirement for all the directors? Why do you require the residential address of all the partners? Aadhaar card is enough. Let me give the Aadhaar card. So the government should seriously consider the reduction in requirement of the registration. Only 2-3 requirements: proof of the incorporation, name and address of the director, partners, proprietor, and the applicant's credential. That should be sufficient for the grant of the registration. And then you make a verification later on. And when you find that I'm not a genuine taxpayer, then you cancel my registration from a prospective date, not from retrospective date. So that the genuine persons buying from those persons would be protected. And they have also proposed for the requirement of registration by the supplier to the e-commerce platform. Now, what is happening today, that when you want to supply through the e-commerce platform like Amazon, Flipkart, Blinkit, etc., etc., then you have to store the goods in their godown nearby area all over the India. And they insist for the registration for those place of the businesses. Now, this aggravates the issue of a multiple registration in a multiple state. When you say GST is a one nation, one tax, then what does it make it different when I pay the tax in Maharashtra under the IGST for the supply of the goods made from the Gujarat or other state? The ITC credit is being passed on to that state, and that state who is where it is being consumed, you are getting the tax by way of mechanism of the ITC adjustment. Then why do you insist that traders should get registration all over the state? Why don't we think of a single registration in a single state? So that is what they have implemented for the small dealers, traders doing e-commerce transaction. Through the e-commerce transaction, they would propose that there won't be requirement of registration in those states. It's a welcome provision, and we hope that it is being implemented in a good spirit. When I say it's a good spirit, means the policy maker and the administrator, there should be reconciliation between them. I have seen that the officers who was in administration, when he goes to and shift to the policy department, and he is very good and very bold and beautiful, but when he comes to the administration, the same person's attitude changes. So like that, we have got the reconciliation of the R1 and 3B and 2A, 3B. Like that, there should be a mechanism between the policy maker and administrator. Then most of the problem could be solved for the implementation of the government policy. And the next is a very good amendment. They are proposing for the intermediary services. We know that under section 13(8)(b) of the IGST Act, when an intermediary service is provided to the foreign recipient, the place of supply is not the place of the recipient, but the place of the location of provider of the services. Now take the case of a commission agent who is doing the job for the importer, job for the foreign supplier. Now we have opened our economy with the Europe, Australia and UK under the free trade agreement. So the many foreign companies would like to do the business in India, and the Indian commission broker and agents would provide them services of selling the goods in India, and they will earn a commission. When you earn a commission, it is considered as to be an intermediary services because you are arranging or facilitating the trade, supply of goods and services between two persons. Although there is a rider, does not include principal to principal, but still the department in each and every case, right from the service tax till today, considering all such type of the services as an intermediary, although it was not provided as an agent and principal, but on a principal to principal basis. The case of the BPO, knowledge process, freight forwarding, trading in the goods, and also other area, liaison office. All these services, they consider it to be intermediary and taxable in India. In 2018, to promote the Make in India, the amendment was made that in respect of the job work on the goods, the place of supply would be the recipient of the services. At that time, we were saying that intermediary concept should also require to be changed to promote the commission agency and service industry in India. We are giving the foreign exchange. So the only criteria should be the receipt of the money in foreign exchange. And that should be zero rated. Under the service tax, you know earlier that even the hotel industry receiving the foreign currency for the foreign customers, it was considered to be export of the services. But similarly, the government should also consider that any services provided to any person against the receipt of the foreign currency should be considered as a zero rated supply. And now they are proposing that amendment into the IGST Act to delete this section 38B of the IGST Act. Thereby, the supply of the services of intermediary to a foreign party located outside India would consider as a zero rated supply, which means that either you can supply with payment of the tax and you claim the refund, or it would be without payment of the tax under LUT and you claim the refund of unutilized ITC corresponding to that supply. It's a very good movement by the government, and it will promote the supply of the service industries in India for the international trade. The effective date of this amendment would be from the date of the amendment. And friends, this amendment is required under the IGST Act, for which the Parliament has got the power. And the monsoon session of the Parliament is over. So either the government should pass by ordinance, or it would be placed in the winter session. So let us keep our finger crossed from which date it would be implemented. But it's going to be implemented, and from that date, this benefit would be available. Till then, we would be benefited by the circular issued by the Commission CBIC in 2022 for clarifying this zero-rated supply of the goods for the intermediary services. And also, there are certain judgments given by the tribunal and the High Court under the earlier service tax, which will help us to guide with respect to the litigation, ongoing litigation on these intermediary services. Then the next amendment is proposed is in respect of the deductions from the sales with respect to the post-sale discount. Now, you know that under Section 15 valuation rule, a provision is made that any discount given post-sale would be eligible to be for the deduction on a two condition, that it is agreed at the time of the sale, and also corresponding ITC in respect of this credit note is being reversed by the recipient. And in the Finance Act 2025, they also made the corresponding amendment to Section 34 relating to the issue of the credit note for other than the post-sale discount. There also they inserted the condition that the ITC should be reversed by the recipient. And this issue was discussed in one of the service cell meeting by our association with the commissioner. Then I think it was before the commissioner. And we said that how do we come to know that the recipient has reversed the ITC? So they say that we are going to implement the IMS, that is the invoice management system. So once the credit note is issued and uploaded on the GSTR1, then the recipient would have an option either to accept or reject it. Once he accepts this, which could be a by default, then the ITC available to him would be reduced in GSTR2B. And they wanted to make it a GSTR3B as a auto-populated, so that the amount of the ITC available to the recipient would be calculated on the basis of the GSTR2B. When the ITC is auto-populated and calculated as per the GSTR2B, which also would include the reduction of the ITC toward the credit note, then the prima facie burden is being discharged by the supplier for the proof that ITC is reversed by the recipient. Then it would be on the part of the department to prove that having been auto-populated ITC in GSTR3B, the recipient has not reversed the ITC. And with this auto-population of the data, the government is also issuing the notice in DRC 01C when the ITC is claimed more than the auto-populated GSTR2B. So we can say that now the government should remove this condition for claiming the deduction of the credit note for claim reversal by ITC by the recipient. That the recipient is not eligible to claim the ITC, why do you put that condition on the supplier without giving him power and without providing in the law the manner of proof of such condition? So the government should consider this in the package of 3.0 tax reform. And I hope that 3.0 should come soon. Then we had a circular on in June 2024 with respect to the financial credit note. They have clarified that the credit note for which deduction is not available under the GST law, the supplier can issue the financial credit note without effect of the GST. When such credit note is issued, then the ITC need not to be reversed by the recipient. Now, since they are allowing the deduction for the sales in respect of even the post-sale discount without any condition, then there is no need for issue of the financial credit note. So that government is thinking, the council recommended to issue a fresh circular in this respect, and we will be soon having a circular on that matter. Then next is in the reform is in respect of the law and procedure. That is a retail sales price based valuation for pan masala, tobacco, gupka and cigarette. I will that would be they will make a rule for levy of the tax on the retail sales price. We will have to wait and see what kind of it. And we don't bother about the tobacco and cigarette. These are the seen goods. And we want that the more and more tax could be collected from that sales, so that people would consume less that seen goods. Then the news for the G State Tribunal. Now in the WhatsApp University, I find that people were asking when the tribunal would be there. Now I say to them that it is the government should worry about the pendency of an appeal before the tribunal. Lot of revenue is blocked because of the non-operational of the G State Tribunal. Now, in most of the state, they have also appointed the G State Tribunal member. We have got the president also, and principal bench at Delhi is also operationalized. and now they are hearing the anti-profiteering matter. So soon we will have a GST tribunal, and they have made announcement that the filing procedures would be started by the end of the September 2025. And hearing of the matter would started by December 2025. And they have also proposed to provide a timeline for the pending appeals till 30th June 2026. Please keep all these things in your mind that under the GST law, there is no power to condone the delay in filing the appeal beyond the prescribed period. And lot of litigation is pending before the High Court and Supreme Court in this respect. And every day we get a judgment either is saying that you have power or saying you don't have a power. Matters pending before the Supreme Court. So to avoid this thing in future, for at least for the filing of appeal before the tribunal, our members should be vigilant to tell the client, and our association also would make an attempt to publicize this in a large scale, that the no person should be deprived to file the bill because of lack of knowledge on that part. So we should be ready for filing the bill before the tribunal. And from the Maharashtra, the government has already selected the 3 technical members for the GST tribunal, and that notification soon would be available in our GST review. So I'm not sharing the details right now. Then the much wanted rate rationalization. So there were the 4-tier rate of the tax in the GST. Now it is a 2-tier, they say. Standard rate of 18%, merit rate 5%, and seen goods 40% tax. But that is not enough. We have also special rate of tax on the jewelry and diamond, 3%, 0.25%. That is still continued. Rate of the composition 1% and 5% is also continued. But when we say the 2-rate structure means that normal and regular rate under the provisions of the law, that is 5 or 18. Most of our day-to-day item and a necessity item is either in the nil rate or 5% tax. So for those items, we are at par with the UAE, where the rate of tax is 5%. And for other goods and services, the rate of tax is 18%. So what has done today? The 12% bracket is removed. Also, they have made a rationalization of the taxes and see that the same class of the goods is put in the same class of the rate of the tax. We had a non-alcoholic beverages carbonated 28 plus 12. Other than carbonated 18%. Now non-alcoholic beverages other than specified elsewhere is in the bracket of 40%. So that way they have made an attempt to rationalize the rate structure and classification of the goods. Now you will find that if you want an 18% as a general rate of the tax, in the schedule they have described the lot of the classify of the goods by reference to the HSN and Service Accounting Code. In one of the meeting, I said to the departmental representative that why you have created this classification. Let us there will be only 2 schedule, nil and 5%. And you have a residual entry, all other goods and services 18%. That's all. You need not to refer all the classifications of the entry to find out the rate of tax applicable thereon. This was in our Sales Tax Act in the VAT law, that we had only 2 or 3 schedules specifying the rate of the tax nil 5%, 10, and the residual entry 13%. That should have been the ideal way of providing the rate of the tax. They say that we wanted to know that on which goods we are collecting the tax. Then I said that you have got the details of HSN in GST R1 with the rate of the tax. So you get the all information that which goods fetches the how much revenue. For that you need not to have a classification in the schedule with respect to the HSN. Let us hope that in 3.0 tax reforms the government considers this and make it the classification rate schedule more simpler by providing the two rate of the tax and other goes into the 18 or 18% as a residual entry. Then we go to the GST on services. First thing is the all insurance, life and health. When I say all, not the general. Life insurance, health insurance is made tax free. Earlier, there was a proposal life insurance with endowment or without endowment, like there was a discussion, but they have made it very simpler that all the life insurance, healthcare insurance would be tax free. And from 22nd September, if you take any policy, then there won't be any GST implication there. Then they would they have proposed the clarification that the standalone restaurant cannot be classified as a specified premises. Let us wait and watch what it could be. Now you know that we have got a rate of the tax on the restaurant based on the hotel premises where it is situated. If it has got a room rate over 7,500, then the restaurant will be subject to 18% tax. Otherwise, it is a 5% tax. Then the last year in Finance Act 2025, they gave option to the hotel to go for the 18% bracket and not to the 5% bracket so that they can opt for the 18% tax and ITC. That benefit is not made available to the restaurant. And please note that there is no composition scheme for the restaurant. It is the rate of the tax provided under the Act. So you don't have an option to pay 18% and claim ITC. It is a 5% without ITC. Then the passenger transport services is also rationalized. The air transport non-economy is brought into the 18% revenue rate from the 12%. Renting of water vehicle goods and carriage 5%, 18%. Beauty and cosmetic personal treatment for the cheers to all the ladies. And also gents can go for the beauty treatment. The tax is from 18% to 5%. The next amendment is for hotel accommodation. 7,500 less. It was 12% with ITC. Now it is proposed to 5% without ITC. At a glance, it is very attractive. But consider the Mumbai, where the most of the hotels have freezed their rate of the room to 7,000 and 7,400 so that they remain into the 12% tax bracket. And not only that, the restaurant having at that place also remains at 5% bracket. Now they will not get the ITC benefit. And they will charge 5% tax. So there would be increase in the cost of such hoteliers, but they would not be able to increase their price. So the hotel industry should propose to the government that they should increase the limit of 7,500 to 10,000 rupees. So then their life would become easier. Then this casino, betting, gambling, it was a 28 plus 12%. Now it would go to the 40%. I will touch upon certain the rate of tax on the goods. Most of the all essential item is what was 12%, now is gone to the 5% on this rate of tax. Medicals, implant medicines is 5% bracket. More than 36 item large saving drugs and medicines have been put into the bracket of the nil. Aerated drinks, caffeinated drinks, non-alcoholic cigarette, luxury cars are brought into the 40% tax. Coal is increased from 5% to 18% because of the removal of cess thereon. Biodiesel and menthol is from increased from 12 to 18%. They have made corrections to the inverted duty structure for the textiles and the ready-made garment. When they were put into the 5% tax less than 2,500, from 12% to 5%, the rate of tax on the man-made textiles and fertilizers. Even also they have included the fertilizer into that. Fiber, yarn, sulfuric, nitric acid, ammonia, certain raw material. The rate of tax is reduced to 5%, so there won't be a unutilized ITC to that industry. So my point was that then when you have made a correction to such limited industry, why not you follow the procedures and policy adopted by the Union of Finance Minister in 2000? While formulating the rate of VAT all over India, uniform floor rate, there at that time it was decided by the Union of Finance Minister of India that the rate of tax on industrial input and services, including packaging material, would be capped at 4% rate. Because by keeping that rate, there is not going to be a loss in revenue because ultimately you are giving the credit of the input to all. And that is why under the sales tax law, we had a low rate of the 2% of CST against Form C. And earlier it was 4% in 2002, it was reduced to 2%. So that the cascading effect of the tax is being removed. Now in the GST, whatever my rate of tax on industrial input and the services, I am least bothered because I am going to get the credit. But when we have a tax bracket of the 5% and the nil, that was intended to keep the price of those goods at a lower rate so that the people of India can consume it at an affordable prices. If that be the intention object of the government, then they should consider the rate of tax on all industrial input and the services at the lowest, that could be the 5% bracket. And then if that being done, then that would be the glorious day for the Indian economy. That you can keep it in writing. Then there are certain pleasure exemptions to the armored sedan imported by the President's Secretariat. We will not discuss that. The timeline for the implementation is 22nd September 2025 for the reduction in the rate of the tax or increase in the rate tax of tax. But abolishment of the cess would be from a later date till they settle the loss of the revenue to the states. Now, at this juncture, let me explain you the difference between the cess and increased rate of the tax to 40%. Under the Compensation Cess Act, the cess is collected by the Parliament. And from that pool of collection of the cess, the IGST Act provides the formula for distribution of the compensation to the state for loss of the revenue because of the GST. Now it is 8 years. So there is no need for continuation of the cess. But because of the COVID-19 lockdown, the government provided financial assistance to the state. And for that, they obtained the loan and the interest they are paying. So till that liability and obligation is over, they will continue the cess to the select industry. That is the tobacco and pan masala. And thereafter, it would be also removed. When you have got 40% rate of the tax, then what will happen? 20% goes to the state and 20% goes to the central. So the state government is getting their revenue by way of increase in the rate of the tax from 18 to 28 or 18 to 40%. That is a 22 to 12% increase in the revenue of the state for those seen goods. So there the state would be the direct beneficiary of that increase in the rate. So they would partially be compensated for loss of the revenue for reduction of the rate from 12% to 5%. Then the risk-based refund and the simplified registration scheme would be from the 1st November 2025. Now, let us concentrate on the certain issues and FAQ issued by the government in this respect. The first thing comes in our mind that what will happen to this new rate of the tax. It may possible that I received the advance prior to the date of change in the date of the rate of tax and I supplied after that, or I supplied the goods prior to that, but I raised the invoice after the supply. So there we have got a section 14 of the Act providing for the time of supply of the goods and services based on which the rate of tax will apply. So the notification rate will apply on the date of the time of supply provided in section 14 of the Act. And the government has issued a FAQ 4 and 5 to cover that issue. That accordingly, when the goods supplied before the date of the change, but invoice is not issued. Now you will find that how it could be. Under the law, even for the e-way bill, I have to issue the invoice before the delivery of the goods. Then in certain cases, you may not issue the invoice, but you can supply the goods, like sale on approval basis. Continuous supply of the goods or services, where the milestone is not achieved. So there may be a possibility that you will be delivering the goods but not issuing the invoices. Then in that case, the FAQ number 14 tries to clarify that. Then rate applicable would be on the date of the receipt of the payment if received before the date of the change in rate. If payment received after the date of the change, then the rate as on the date of the receipt of the payment or invoice earlier, which is earlier, will apply. So if you delivered the goods prior to the change in rate of the tax, then only this issue would be there. But if the goods are supplied after the change of the law and also you raise the invoices, then the new rate will be applicable. If you supply the goods and issue the invoice prior to the date of the change, then the old rate will apply. But there is no clarity provided with respect to the credit note and the debit note. Section 34 empowers to issue the credit or debit note when there is a variation of the prices after the supply is made. Now, variation in the prices may be because of your discount, post-sale discount, or a post-sale incentives, target incentives, whatever the reason may be. Either two, the deduction for the post-sale discount was available only when it was a pre-agreed. We are talking about the issue of the credit note in respect of the supplies made prior to the change in the rate of the tax, that is the 22nd September, maybe because of the target incentives, quantity discount, cash discount, whatever it may be. Maybe it is a pre-agreed. Then when you wanted to give the credit note at the end of the quarter, that is a September, or end of the year, that is a 25-26, for all the supplies made from prior to April 35 to 31st March of the 26. Then the credit note is to be issued at which rate of the goods? According to me, the credit note varies the price of the goods originally supplied by you. So the credit note with respect to the supply made prior to the date of the change of the rate of the tax, that is the old rate, should be given a effect that way. And after the supplies, then it would be new rate. So the company will have to devise a procedure for identifying the quantum of the discount with respect to the sale date. Earlier in the GST R1, we were given an option, I mean, it was mandatory to provide reference to the invoice number and the date. Now it is not there, but in the back of our office, we should provide and maintain the data of a computation of the discount with respect to its original supply, whether 12% rate, 5% rate, or nil rate, as the case may be. And accordingly, credit note should be prepared, and accordingly, it should be reported and on the GST R1. And accordingly, the ITC would be reversed at the hand of the recipient, either at 12% as old rate or a new rate of 5% or a nil. This is my view on that matter, and let the governments to clarify this respect aspect also. Then the issue is about anti-profiteering. Today in the newspaper we saw a headline that now we are back to 2017 pre-GST regime for this anti-profiteering. Even under the consumer law also it is expected that government the dealer should collect the tax what is payable and not more than that. Now, when the tax is charged separately in the invoice, then the buyer knows that what rate it is being collected. But when it is sold at MRP in the most of the FMCG or packaged food items, mineral water, cold drink, namkeen, sweets, etc., where there is a packaged goods are sold. And under the Legal Metrology Act, one has to show the MRP. What is that maximum retail price at which it can be sold? You cannot charge more than that. Even in the name of the cooler charges that is being collected in the B town city, even some case in the Mumbai also, the Kirana stores is collecting more than ₹1 for the ice cream and cold drink in the name of the cooling charges. That is not permissible. That is a violation of the Consumer Protection Act, the Legal Metrology Act. You cannot collect more than the MRP, and MRP is inclusive of tax. So, because of the change in the rate of the tax, under the Legal Metrology Act, government had issued earlier circular that all the persons need to change the MRP. And it's not by way of sticker, there is a procedure for the fixation of the stickers on the product so that it cannot be removed by anybody. So, in respect of the stock sold to the dealer, retailer, the FMCG and the manufacturer has to ensure that they sell the goods at a reduced rate of the GST, so they amend the MRP. And they will have to fulfill this procedure. One of the client called me that Janak bhai, now my profit will go up because my rate of tax is reduced to 5%. I said, no. You have to give benefit of the reduction of the price to the consumer. When the government has responded positively for the reduction of the rate of the tax, then the Indian trade and industry should also respond in the same spirit and give effect to the benefit of reduction of the tax by of reducing that price. That I hope that our Indian trade and industry will respond it positively so that we will have A growth rate of 7.5% projected by the government and kept intact. And in 2047, the India would be a number one economy. Then there is the issue of unutilized credit of ITC under CES Act. Why I'm discussing this? That CES Act is being abolished. So that the unutilized credit of the CES will not be able to be used by the person, recipient. When the rate of tax 28 is merged to the 40%, the rate of 12% CES is merged. So when you increase the rate of the tax, then the government should provide the utilization of the ITC with respect to the goods purchased prior to 22nd September or date of change in the rate of the tax should be utilized towards the payment of this SGST, CGST, and IGST. Because 12% is divided into two parts, 6 for SGST, 6 for CGST, and 12 for IGST. So the government should provide a mechanism for utilization of the CES Act towards these two levy. And today in the newspaper also there is a heading that 2,400 crore rupees of the CES credit is a worry for the FMNC. So I hope that the good intention of reduction in the rate of the tax is being properly carried in the same spirit. Then next page, miscellaneous. I'll be taking 5 to 10 minutes for that. There is no change in the threshold limit of the registration, although it was talked and discussion. The new rate will apply to the import of the goods. There is no clarity like the section 14. But according to me, under the custom law, the rate of the duty will apply on the date of clearance of the goods from the custom. So similarly, the new rate will apply, which is prevailing on the date of the clearing the goods from the custom and not on the date of the import bill, not on the base of date of bill of lading, but the date of payment of the duty. That is my opinion. Let there be a clarifications by the custom department on that matter. ITC credit for the goods or services purchased at the old rate will continue to be available. Only restriction is only for the refund of unutilized ITC in case of a trader. The manufacturer will get the refund of the unutilized ITC. Only trader will not be, because it is not an inverted duty structure for them. But that does not mean that they cannot utilize the ITC towards their future tax liability. It will be continue to be utilized, and it is also clarified in the FAQ. Then whenever the goods have become exempt, then section 18(4) will trigger, which provides that the ITC on the stock of the goods, input services, semi-finished goods, even capital goods proportionate as per Rule 43 requires to be reversed. So while filing the return for the September 2025, one has to be careful, and the due date for the September is the 28th October, which falls in Diwali festival. So we have to be very careful for this kind of the adjustment required in the return, and we have to prepare the client beforehand. Although you may be busy in your income tax deadline, but this is also very important for the clients to understand. Then there was a question asked to the government in FAQ that should I change the e-way bill, because you dispatch the goods, you issue the invoice after the date of the change. So e-way bill was repaired at the old rate of the tax. So you need not to change the e-way bill. You have to apply the provision of the law based on section 14 and other provision for the new rate of the tax. You need not to change the e-way bill. That is explained in FAQ 12. Now, there were also query in the WhatsApp University that they have mentioned roti paratha. What about thepla and bhakri? So they have clarified in FAQ 16 that all types of Indian bread is tax-free. Whatever the name you give it, and although the name given by them is illustrative and not an exhaustive. So all Indian breads, whether you name it roti, bhakri, rotla, paratha, chapati, tandoori roti, naan, whatever it may be, it is tax-free. But when it is supplied in the restaurant, then it is considered as a supply of the service and it loses the exemption for that. So there the rate of 5% or 18% will apply. Friends, there are a lot of other issues to that I am not covering here because it is nicely explained in the FAQ issued by the government. And we will have, I request the president and the team to have an exhaustive seminar on this aspect to discuss threadbare with reference to the exact text of the notification, but the 360-degree view of the industry. That now today what we have discussed is the change in the rate of the tax proposed by the recommended by the 56th Council. There may be other rate of the tax in 18% and the tax-free or by way of section 11 that we have not covered. So if you want to have a 360-degree view of a classification rate of the tax, then we should see the classification of goods and services under other notification also. Then only we would be in a position to tell our client that at what rate of applies to your goods and services. But in short, in general, I will conclude that there is a sincereness and honesty in the government for making the GST more simpler. And it is up to our shoulder. Let me say that boldly that this association, GSTPAM, who is now celebrating the 75 years of its existence, has been and had been continuously representing before the government for simplification of the law and to make the life of the taxpayer more easier and simpler, even at the cost of our career. It is said that when we simplify the law, then nobody will go to the custom professional. Yes, we know that, but we are ready for that kind of the sacrifice. We want that our members should more concentrate now on achieving the goal of the government of India of a glorious economical developed country in 2047. And in the next 25 years of the association, we should continue to strive for the development of this country. And we hope that our next generation, that's applicable to me, who are more than 65 years, not applicable to Parth and the young generation, but the responsibility on your shoulder to see that when we celebrate 100 years of this association, the India is at number one, and the USA and other countries afraid of the tariff of India, not otherwise. Right today also, we are not afraid for the USA tariff. You can make it to 100%. The life of their citizen would be miserable and not our. But this spirit in our mind, I conclude and hope for the greatness of our Indian economy. Thank you. Thank you all.
Thank you so much, Janak.
Thank
Bhai.
you. Thank you, Janak Bhai. Just to add what the association, and I once again apologize for the internet troubles. The internet troubles got sorted, and then now there is no electricity like where I am. So thankfully, with the hotspot, it is actually the most stable that the internet has been. So I apologize to each one of you. In fact, Janak sir, what we said that I remember when Pranab Bhai was the president. GST was coming in, lot of the representations and everything that were made, which were not accepted at that point of time, brushed aside, are slowly being brought in. In fact, I'll give a very recent example. Knowing fully well that post-sale discount is a problem, we had actually kept that as one of our topic in the RRC. So GSTPAM is so in tune with what are the issues. In fact, we were also thinking before the MSME whole thing about amendments and everything came, we were also thinking of a publication on MSME. So the amount on the ground level, GSTPM knows what are the issues, and we are always there. So I thank you for bringing that up. Now we can take up the questions. Yeah.
Just a request, President, you can hand over the memento and
I will not be able to hand over the momentum, madam, because it is like
Leave
this.
I will
Aisa
just,
dice-
I will just
there
share,
is no light.
share
No.
the screen.
No, basically, Parth, you can just show it on the screen. We personally hand it over to Janak Bhai, no issues.
That's okay.
Right. Okay.
Yes, Ajay bhai, go ahead.
So,
Okay. So this
Thank
is
you, Janak.
this is an appreciation of by GSTPM.
let's go to the questions quickly. Abhishek, Ajay
There-
sir,
there
abhi
is only
questions
one
pe jate
question.
hain there. No,
There
is
people
only-
have raised hands also. People have raised hands also.
There is only one
So
question.
take
One question on the screen by Bipin Soman. Sir, please once again guide on when rate change need to hike MRP. What are the options available?
See, the MRP, you can hike it. There is no issue on that. Based on your cost and based on the policy of the management, you can change the MRP. But what here I am pointing out that when the rate of tax is reduced on the MRP, then the MRP which is being printed on the stock of the goods to be sold after the date of the change in the rate of tax, the people consumer must know and should get the benefit of the reduction in rate of the GST, and therefore under Legal Metrology Act, the government has mandated a procedure to be followed for change in MRP for reduction in the rate of the tax. And that one has to follow it, otherwise you may be subject to the penalty under the Metrology Act. And under in the GST, when it was there in 2017, we were telling our client to do so. But some of the FMCG have not done. And so we have got so many decisions under anti-profiting by the government, imposing the cost, hefty cost to the industry. So that we have to tell our client that we must be honest to give the benefit of the reduction in rate of GST to the consumer. Your saying and the label on your shop and the office, customer is boss. Let it be implemented.
So
Yeah.
so Janak Bhai, so to put this practically into process by each of these FMCG companies, their products would be lying at so many places, at warehouses, in their own stocks, and somewhere they would be with lying at the retail counters also.
Yeah.
So what would happen? They will have to call back their earlier stocks
No.
and provide
No,
new
the
stocks, or how would that practically happen?
So know that you know that all FMCG is making the advertisement. I remember in 2017 advertisement on one of the beauty product. He was saying it was 31%. There was a cross and 28 new price. So the under the Legal Metrology Act, it is provided for the change in the MRP label at the down the level, retailer level, and they have to make an advertisement in the local newspaper for the changes in the MRP. And now, because of our WhatsApp University, Facebook, Instagram, even the consumer, a housewife, a student, an agriculturist in the rural area knows that the rate of tax on this product, beauty product, toothpaste, Colgate, is reduced from 28 to 80. So they would be also asking the supplier for reduction in the MRP. Yes, it's a teaching process. And that's
So-
why government has given time to you.
So, correct. So only 15 days are available for, for making it practically happen. Otherwise, on 22nd, 23rd, such things would come up starting at this product is still showing the old rate.
But Pranav, you will be surprised that you look at your Amazon. The AC industries and TV industries already started advertising.
Correct. Sir, in fact, what will happen, no, Pranav bhai, what I foresee in this is that, lot of times what will happen is just like, when the prices go up, the grammage is reduced. Here they may, instead of changing the MRP, they may change the grammage also. So it is going to be, they can increase the grammage now, no?
But
For
all
the
stock
cost
you
that is
cannot do,
happening.
na? Park.
Yeah,
For all
so have
stock.
a offer, three pay, one
The
free
problem
or
is for
something
the
of that
existing
sort.
stock. Yeah, parts of the problem is for the existing stock which is lying at the retail counters.
Yeah, it is problematic.
Or at
It
the
is
wholesaler,
problematic.
distributor, manufacturer. I think
It
there
is,
the
it is. Next 15 days are going to be quite a challenge. Quite a
that's
challenge.
challenge for each one.
And Pranav, we will be receiving a call from our client. In fact, I already received 3-4 calls yesterday.
Yes, sir. I think that's already started. Sir, one
Yeah.
more. I have a query from one of our clients regarding the intermediary services.
Hmm.
Of course, I think it's a very welcome move that Section 13(8) is proposed to be omitted from a future date after it gets notified by the government in the IGST Act. The question is that by this omission, what will happen to the previous, you know, cases or the previous years wherein, there are several judgments to tell that, this intermediary service, especially Dharmendra Jani Bombay High Court judgment, that, this should not be considered as leviable to CGST, SGST at all. So already, people have started analyzing on it, what will happen to the previous years in case of omission of an provision or the act.
It will be the same that is
section
happening.
itself.
It will be
Gujarat
the
High
same
Court
issue
judgment.
that is happening to 9610.
Gujarat
That
High
is-
Court judgment. Gujarat High Court judgment, it will apply to the all pending cases.
It will apply to the pending cases and not those those who are into litigation may stand to benefit out of
बस
it.
प्रणव थोड़ा अपना सेमिनार के लिए रखने दो ना.
Raised hand को ले ले क्या? Raised hand को. We've allowed them to talk. Prakash Patil sir, I think his question is answered. Anil Vaghani sir, or if he wants to, he can unmute himself. We have allowed him to talk.
Yes,
Or Anil Vaghani sir.
Vaghani has raised the question.
yes, yes.
बोलो
Janak
अनिल
bhai.
भाई.
What will happen about the cess which has been paid by the automobile authorized dealers to the manufacturer, and if they sell the car after 22nd September? Because there are two views coming out of this. Some are saying that being a trader, they may not get the refund of the cess because the cess will go off, and when they sell the car at 40% rate. And the other view is that they can claim the refund. So, and in question number 10 of the FAQ, they have answered that trader may not get it. So how to claim that refund of cess and whether they will be eligible to claim or not?
Anil bhai, I already covered in my topic about the sales credit. Now
I
there are
joined
the
late.
two things in that matter.
Yes.
But there is a third scenario you did not talk. I already had a information for the one of the motor car industry
Okay.
that I will not give the name to that because, and that car manufacturer have told the dealer that whatever the loss of the ITC you get, they will reimburse you.
Okay.
Yeah.
Okay.
So, but that is apart from that, a business strategy and all that thing.
Correct. Correct.
But the industry should represent, they are already representing to the government for
Right.
allowing the refund of the credit of the cess. I
Okay.
said that there is justification when you are merging the rate of cess to the GST.
Correct.
28 become 40. So
Yes.
otherwise, if they don't allow the refund, then the
Ah.
rate of the tax should be 40 plus 12, 52%.
Right.
That is not warranted by the government, and definitely for that matter, government will consider it positively. That's my hope.
Okay. Okay. Thank you, Janak bhai.
Another question by Aditya Khandelwal. FAQ number 10
पहले जो
states.
raised hand, एक मिनट आदित्य, जो raised hand है उनको बोलने दो ना पहले
Prakash,
उन्होंने, या हसनैन चंगी सर. वो
Hasleen?
नहीं है तो ये
Yeah.
उनको ले लो, आगे आगे ले लो, शैलेश
I'm
पाल
sorry,
सर,
sir. I
शशांक
might
दो।
have raised my hand by mistake.
Yeah.
Please go ahead. I don't have an intelligible question, sir. Thank you so much.
Okay.
Thank you.
शैलेश पाल सर देखो, शशांक दोन, सुनील कुशलमी सर।
Yeah. Prakash Patil, sir, are you there?
Yes, ma'am.
Yes, go ahead.
Go ahead, go
Yeah.
ahead. Go ahead.
Thank you everyone for the wonderful session.
Thank
I think partially it has been answered, my question by Janak sir, but again I would like to ask that if the anti-profiteering law is done away with, so is it mandatory as per legal metrology law to reduce the price, or can I, how can I manage it if I don't want to pass on that benefit to the customer?
Patil sir, I am not on the law provision. If anti-property done away, government will reintroduce it, but under the Consumer Act also,
Okay.
and that it is an obligation of the community, trading community, to
Hmm.
pass on the benefit of the reduction of the rate of the tax.
Okay.
And we consider that our goods are being sold at a rural area, they don't know. So it is the obligation on the part of the company to change the MRP of the packet product.
But it is okay, but so in case of MRP, where the MRP is applicable, what about the other goods?
But then there is no question, then you will be charging the tax separately. So when you are
Okay.
charging the tax separately, nobody is going to give you the increased rate of the tax.
Okay.
The problem is only when MRP is inclusive of the tax.
Right.
So you cannot reverse the MRP by dividing it by 5 when it was at 12% at the time of a packing of the goods. So that is the
Okay.
point.
Got it. Thank you very much.
Plus, sir, there is another thing, no, that we are not understanding that these provisions are so well marketed that we have to hope that free market also takes over, no? Because there will be a pressure on the market also to reduce the price to some extent. So it is always, I think, sometimes the market deals with it better than regulation, I feel. Next.
Okay. Next question is by Aditya Khandelwal. FAQ number 10 states that no refund of accumulated ITC shall be allowed under section 5432 as input goods and output goods are the same, though tax rates of goods in stock are as on 21 September is higher than the rate of tax on goods sold after 22nd September. Is it necessary that input goods and output goods should be different?
See, the input tax inverted duty structure refund provision is made for those who are availing the inward supply at a higher rate and providing the output supply at a higher rate. That would happen only in case of a change in the taxation nature of the goods, so applicable to the manufacturer. So in 2020, they have made an amendment that in case of a trader, because of the change in the rate of the tax on the output is become lesser, then it will not be considered to be inverted duty structure and you will not get the refund. That is a provision in the law. But that does not mean that you will lose the ITC. You can continue to use the ITC towards your future tax liability. But then you need to negotiate with the supplier, and I am sure that all the FMCG is taking care of all these things. And they have started taking care. Because I heard the news from the mail from the FMC to the dealers that whatever the loss you make because of this change in the rate of the tax ITC, they are going to reimburse you.
100%. Connected to ESKTOP 3G.
So it is there in the process. But we are talking today the law point. And the law does not allow you, or you have to challenge it. Yes, Sunil sir.
Yeah, good evening, everyone.
Namaskar.
Sir, I have missed some part of the meeting. I just wanted to know whether when we give the advance has been given at the rate of 18%, and now that product has gone down to 5%. What will be the effect on the final invoicing when I supply the goods?
So that is, they have cleared in question number FAQ 4 and 5.
Okay,
That is the section 14 will apply.
okay.
And section 14 says that when the goods are supplied before the rate of the change in the rate of the tax.
No, I have not supplied the
No,
goods.
I'm on that one, Sunil sir.
Yeah, yeah.
In FAQ, they have not covered this specific issue. In 5, they say it would be governed as per the provision of the section 14.
Okay.
That 5. But that is not the section 14 does not cover such type of the scenario. My view is that in that matter is that the rate of tax will apply on the date of the supply, which is the taxable event.
Correct.
And taxable event is a supply of the goods and service. If it happens after the date of the change in the rate of the tax, then that new rate will apply. So there would be adjustment at the time of the final invoice.
Okay.
That should be the correct interpretation of the provision of the law.
Janak bhai, Sunil bhai.
Haji.
So Sunil bhai, your question is relating to goods. So on goods there is no advance.
नहीं, services और goods.
सर्विस है ना, होटल बुकिंग. अरे होटल बुकिंग 12 का 5 हो गया.
Services is fair enough, but not on goods.
Even in transport, in the airline agency, ticket अपने book कर दिया.
So basically, I think Sunil bhai,
it's a larger issue than a smaller issue.
So Sunil bhai, in case of services, I think that that rule of 2 out of 3, I think that rule would prevail in this. If 2 out of the 3 events have occurred prior to the date of change, rate change, then the old rate will apply. If one happens subsequently, the new rate will apply. But of course, you need to understand which 2 out of 3 is happening. Because one is getting the advance, other is raising the invoice, third is providing the services. I think where 2 out of 3 are happening prior to the old that date, then the old rate will apply as the new rate will apply. Section 14, as Janak bhai mentioned, that will prevail in such cases.
No, this is basically specifically for the purpose of EPC contracts I was talking about.
So that is services.
Yeah, both services and goods are
Sunil
involved in that.
Hotel industry, we are booking for 6 months before. Train booking, passenger airlines.
Yeah, that's it.
Yes.
Yes, Umang, what do you have to say? Umang, your view?
No. There was one question.
Yes, Janak bhai, good to listen to you. Only one question. Rather, I was wanting to supplement regarding the operation of the anti-profiteering in case of services. Let us say entry to the cinema hall, the rate of tax is reduced from 12 to 5% for the less than 100 rupees ticket. Now, what has been observed is in the past also when there was a change in this rate, the cinema halls would earlier have a, let us say, price of 88 rupees and 12 rupees was tax. I'm just putting it simple. Now, they would make the base price as 95 and make it 5 as tax. Now, here the anti-profiteering authorities have raised the issue and say that you have now increased your base price. They say that 100 rupees was a come price, and accordingly they have raised demand on these cinema halls on these lines. So what I'm trying to alert is, look here, it is not only MRP goods, it is the services also equally important, and they ought to be considered when you have the pricing to be considered. Pricing to be adjusted. So now, so what will happen is advance booking of the cinema for 22nd or say 23rd. Now that would have happened already at the old rate. Now, even if you want to play around with your pricing for the let us say matinee show or the night show for 23rd, you would not be able to change this pricing just because you want to change the 100 rupees and in your back office calculation you change it separately. So play safely. Do not try to outsmart the system. System knows what they want to do. And this is sharing from the experience.
Yes,
because
correct.
My client has faced this issue and we are in High Court now. All right. So this
Yes.
I wanted
Thanks
to
for the
share my
input.
experience.
And that is what we would say to our client, all of the members of the association, that be honest and let the government to be honest.
Correct. Thank you very much.
So Janak bhai,
Yeah.
this section 171 anti-profiteering, I think the amendment which was brought about, I think there is no sunset. I don't think that it's purely put to a sunset clause, anti-profiteering.
Anti-profiting authority is abolished, and that is given to the now
The appellate tribunal. So I think that only the authority
it is still there. It is still there, but authority is abolished.
Anti-profiteering has not gone. Somebody was mentioning that anti-profiteering has gone, but I think that only the authority has changed. In between, it was this Competition Commission of India. Then again, they have brought it to the anti-profiteering authority. Now it is with the appellate tribunal, but I don't think the provisions have been rescinded.
No. So the powers of anti-profiteering, the sunset was on 1st of April 25. Section 177 remains. So you as a taxpayer is obligated to reduce. Any new complaints after 1st April 25 would not be entertained by National Anti-Profiteering Authority, and it would now lie with GST Tribunal.
Right. So only the authority has changed.
Authority is changed, not the provision.
Okay.
And government is aware of all these things, so they will come out with some kind of the clarification on that matter.
So better not to profit out of taxes.
That is what I say. If you want that, he wanted to say that India is like a UAE, Singapore, Hong Kong, then let us be like that only.
Yes.
No, but sir, if you ask me what Rajat bhai was saying, if the base price is increased, actually speaking, nobody can, as per free market principle, nobody stops you from increasing the base prices. It's a anti-profiteering, sir, is a good thing in theory, but actually speaking, sir, to actually determine what is the actual profit out of tax that you have done is very difficult. So I think that is why in most cases we'll have to depend on the market to correct the prices. Otherwise,
You see, look at this scenario, that because of the reduction in the rate of tax, you are not changing the price. You are increasing your base price. Come price is the rate and same. That is a good case for anti-profiteering. But then you have to prove that I was to increase my price because of my increase in the cost, etc. It's very difficult to prove. And nowadays you know
because of that only.
And nowadays you know that how the judges are. Although it was said that कानून को अंधा पट्टी है, but judge को नहीं है. Judge looks and knows the smartness of the businessman. So nowadays the scenario is changed. Anyway, we'll leave it to the industry to say on that point.
Okay, one more question.
Bipin Soman sir ka kuch.
Bipin Soman's question is, if room rate of hotel are both less than 7,500 and some rooms higher than 7,500, what is the rate on restaurant in specified premises? 18%.
18%.
So it's 18%, correct?
Yeah.
One more question by Dhaval Ostwal. Sir, in case of intermediary service, one of our clients have already paid GST on advance received on such service. Since such services would be treated as exports, can we claim the refund on account of the same?
Yeah. After the date of the amendment, one has to see.
Amendment is still to be, it is to be brought into the act. It is only a press release as of now. And the date of provision of service will also matter as per section 14.
The same thing what we discussed for the goods, section 14.
Yes.
Any other questions? There is one anonymous attendee who has written that, sir, can you please highlight the changes in rate in rate of change in labor? What kind of labor is covered?
So job work charges is defined under the law. There the 12% tax was there. If you were paying 12%, then you need to look at that. Some of the job work is put into a basket of 5%, some are rest of it 18%. It is not a labor, it's a job work charges. And job work is defined of a processing on the goods belonging to others. Labor charges continue to be taxed at 18%, and it was 18%, and now also it is 18%.
We have one. Sushma.
These are all the questions.
There are few questions also, Bipin Somani's. Soman, so in case of MRP change and the rate is changed from 5 to 0, then can we avail the ITC in electronic credit ledger?
whatever ITC on the stock of the goods on the date of 21st September, you need to reverse the ITC as per section 18.4. But you can continue to avail the ITC, but where you will use it, your item is tax free. Unless you have got other taxable item.
But reversal will be required, no? For the stock of
Reversal for the stock required, but even though there still remain ITC credit after reversal, then where you will use it?
Yeah, unless there is any other item available.
Yeah.
If there are no other questions, then sir, can we conclude or?
Sushma Kabra is there.
Hemant
And
Walkar has
Vaghani
asked-
sir also is raised.
Hemant Walkar has asked, what is the GST rate on HSC monthly repair and maintenance above rupees 7,500?
There is no change in 7,500. It was 18% and remain to be 18%.
No change, Baba.
No change. That's all I think. We have covered all.
We have
नहीं वो कोई वखारे सर ने वापस हैंड रेज किया था. Yes, Vaghani sir, you can unmute yourself.
Regarding reversal of ITC, only if the goods have become exempt, then only you are required to reverse.
Yeah, well, that was the query, Anil bhai.
Yes. So if the rate is reduced, then it
Then
is
no.
not necessary
No,
to-
not required.
Yeah, that's all.
Yeah, thanks for the clarification.
Yeah, thank you.
और कोई है?
नहीं, दिख तो नहीं रहा अभी.
So, yeah, one more message from Mr. Somani.
Soman, Dipen Soman, can you highlight on specified premises?
Having a room accommodation more than 7,500.
If your anything in your rack rate is more than 7,500, then whatever premises are there inside for food or whatsoever are specified premises in the most simplest terms.
Okay, that's all.
Okay, thank you very much.
Thank you. Now I request.
Thank you, Janak bhai.
Thank you, Anil bhai. Nice to see you.
Janak bhai, we reserve the right to call you again when GST 3.0 comes in. It was an excellent session, sir.
Thank you.
Yes, Ajay bhai.
Can we present a hearty vote of thanks? Then I would request my co-convener, Advocate Ajay Talreja, to present a hearty vote of thanks to the speaker.
Thank you, Sejal ma'am. On behalf of GSTPAM, I extend our heartfelt gratitude and thanks to our own CA Janak Vaghani sir for sharing his valuable views on such a important and thought-provoking topic. His words were deeply relevant and will definitely guide us in the challenges and opportunities we face in view of the upcoming changes in the GST law. The clarity of his talk and his expertise will indeed be helpful to all of us. Sir, we are thankful for the time and effort you have taken for all of us, and it has been a truly learning and enriching experience, especially on the occasion of this Teachers' Day. Thank you, Janak sir. We all hope welcoming you again in the future.
Thank you.
Thank you.
Shall we end?
And then some people have asked for notes, no? That we'll convert into PDF and share, but these are the written notes. I mean, these are not like, but if people want to go through, we can, no?
Well, you know,
We can share.
we are publishing the speakers forum in GST review.
Yes.
Yes,
That will happen only. Yeah.
That will be, you give it to assist people, it will be speakers forum. So people will get it from the GST review.
Okay.
So there may be some mistake in that typographical mistake.
Sure.
So that's why I prepare a detailed note in the Word format rather than the PPT. So that in speaker forum it can be published.
Yes, sir. No problem.
Thank you, sir.
Thank you.
Thank you so much.
Thank you.
Sir, and thank you everyone.
Thank you.
Okay, bye-bye.
Thank you.
Chalo.